Hi, everyone. Thanks for stopping by. I'm Hollee Baird. I'm a data and analytics technical advisor here at Novi Labs. And today I'm going to be talking about the Haynesville, which is probably the most interesting story in U.S. gas today. So I'm going to spend a few minutes giving you some context about the Haynesville and then get into the Novi Insights platform and show you the data live. So quick orientation first, and I have some slides. The Haynesville sits in northwest Louisiana and northeast Texas, with the core of the basin in DeSoto, Caddo, and Bossier parishes in Louisiana, and extending into Panola and Harrison County in Texas. It's a very deep play. Wells run 10,000 to 18,000 feet, which makes it expensive to drill, but yields very high quality dry gas. And this map from the EIA shows the extent. It's older. It's from 2011, but the red outline is showing the extent of the Haynesville, and the blue is the Bossier. So here's the arc of the play. It was first commercially developed in 2008 and ramped aggressively between 2008 and 2014 during the shale boom. In 2016, gas prices crashed. Henry Hub fell to $1.50 per MMBTO, and that was the lowest in roughly 2 decades. Rigs left, production dipped, and what pulled it back out was in 2017, the modern shale boom. So there was a step change in completions, drilling much longer laterals with bigger fracs that reset the well of economics and restarted growth. Production climbed from there to a peak near 17 BCF in 2023, and then pulled back in 2024 when Henry Hub prices fell again. Fell below $3.50, which is kind of the benchmark that most operators need to drill profitably. In the last year, it started ramping up again on LNG demand. And that whole story is going to be available in the data we're about to look at. So a little bit of geology, because that's my background. The Haynesville is a stack play, which makes it especially attractive. So the primary target is the Haynesville Shale. It's the major producing formation in the area. The Bossier sits directly above it, and the two are becoming increasingly developed together on the same pad. And co-developing the Bossier will add inventory depth without having to buy new acreage, which is super attractive. Below those formations is a smackover, which is the source rock that charged the whole system. Above the Bossier and the Haynesville is the Cotton Valley Sands, which are an older conventional target. And stack pay means more wells per section and more years of drilling from a position an operator already has. So fresh story within this basin is a shift into who owns the play. So in the last couple of years, Japanese companies have put about $9 billion into Haynesville through 2 separate deals. So Mitsubishi acquired Aethon Energy in January of 2026 for about $7.5 billion and rebranded it to Adamas Energy. And because Mitsubishi already holds Cameron LNG capacity, that production is tied straight to its own export offtake. A few months earlier, JERA, Japan's largest power generator, bought into the Western Haynesville for about $1.5 billion. So 2 Japanese majors, 3 months apart, both buying gas as an LNG feedstock. And that's really the thread that's tying all of this together. So the Haynesville sits closest to the Gulf Coast LNG complex. That's around 14.5 BCF per day of existing export capacity, with Sabine Pass and Cameron, the nearest terminals here in Louisiana. And as U.S. LNG export capacity grows, having gas supplied directly to that infrastructure is enormously valuable, which is exactly why the Japanese capital is showing up here and not somewhere else. And so that's the backdrop. Now let's get into the platform. Enough with these PowerPoint slides. So I'm in Novi Insights already, and I can turn on a little shapefile of the basin showing the extent of the Haynesville Shale. I'm filtered down to the Haynesville Basin. So that's what filter is already on the map. And as you can see, I've got a lot of wells, over 100,000. So let's narrow that number down further and drop out the verticals. I'll turn on my horizontal wells right here, hit apply, and watch the well count. It's going to drop down to around 12,000 wells. And that's a big drop. And that's because the vast majority of the wells in the area are vertical. So Cotton Valley and Travis Peak, which are conventional plays, and that those vertical wells targeting those formations go back decades. By filtering to the horizontals, we're isolating to the modern shale program. So I'm also in the rankings tab, which we're going to use a lot today. It's a leaderboard. So whatever metric I pick, Novi's going to rank every operator, formation, or county, whatever you're choosing to look at, and that's represented by my filter set of wells here. And it's going to rank them against each other. So right now I'm on a bar chart, and it's grouped by current operator. And the metric that it's on right now is total gas production in MCF, since this is a gas play. As you can see, Expand Energy is so far ahead, its bar barely fits on the screen. Expand is the result of the Chesapeake Southwestern merger, and that bar is reflecting decades of cumulative production from the largest acreage position in the basin. I can click on that bar and I can see where those Expand wells are. Pretty big play, primarily in Louisiana, in the heart of the basin in DeSoto, Red River, Caddo, and a little bit of northern Sabine. Adamas is in second. So that's, again, the Mitsubishi rebranded entity we just talked about. 6 months ago, you would have seen Aethon in that spot. And one nice thing here is I can toggle between current operator and original operator. And switching to original operator, Chesapeake is now at the top, with Southwestern kind of down towards the second, third of the grouping. Aethon is number 2, so that has now become Adamas. And this toggle is really useful anytime you want to see a position before transactions happen. I'm going to switch back to current operator. And let me show you these metric drops downs, because this is where a lot of flexibility lives. So on the production side, I can look at cum gas, like I have on now. I can look at average daily gas. I can switch that to oil or flared gas. And on the completion side, I can rank by lateral length, proppant per lateral foot, fluid, or proppant to fluid ratio. Lots of options. So this rankings view is a production leaderboard or a completion design benchmark, just by changing one of these drop downs. So let me walk through a few metrics and see what the trends say. So I'm going to look at average lateral length to see, and I am going to also turn this filter on to wells that have drilled on or after 2015, because we want to look at the modern program. That'll strip out the earlier vintages that are shorter, have a little less aggressive completion design. So I'll hit apply. And now I'm going to see these average lateral lengths for wells drilled after 2015 in the Haynesville. And you can see there's a tier of operators that average lateral length is pushing past 8,000 feet. That's well over 1.5 miles. Trinity Operating sits at the top with wells averaging almost 10,000 feet. I can also switch to total lateral length to see who has most feet of horizontal wells in the ground. And clearly that's going to be Expand Energy. So they have over almost 600 million feet of lateral in the ground. I am going to switch over to average proppant per lateral foot to look at completion design, how much sand operators are packing into each foot. And Apex is up around 4,000 feet. per foot, which is very high intensity. Let's see where they're located. They've got 157 wells. Looks like they have a lot in Caddo and kind of on this Texas-Louisiana border. Adamos is second, so they're also running a pretty intense completion design program over there. Meanwhile, we can look for Expand, kind of in the middle of the pack at 3,000 pounds per foot. And then Exxon BP, a little less intense. We'll keep an eye on BP because that will come back later. And the metric I really want to land on is EUR. So that's estimated ultimate recovery. So not only can I look at actuals, I can look at forecasted values in this view. I'll go to average 30 EUR gas, and that's going to be measured in MCF. So before I look into that too much, I'm going to raise the minimum well count to 25. And by default, this will include any operator with at least 10 wells, but an average can be badly skewed by a small sample. So 1 or 2 great wells can put a tiny operator on top without telling you anything repeatable. Setting the floor to 25 will keeps the leaderboard to operators running a real repeatable program. Now, let me normalize. I'm seeing EUR, total EUR, but let's normalize by lateral length. So I'm going to be looking at expected recovery per foot of lateral instead of well, per well. This is the cleanest read on rock quality and completions efficiency. It takes advantage of simply drilling a longer lateral out of the comparison. So the order has changed. So BP moves to the top. So we saw earlier they weren't running an aggressive completion design program, but then Apex is number 2, who was running at 4,000 pounds per foot. I'll click on BP to see where they sit. I can see that they have 219 wells, and they're kind of in this corner between Bossier and Caddo parishes, as well as in the Texas side, which is interesting, in this little peninsula of wells in the Haynesville and on the Texas side. So BP isn't necessarily drilling the most wells or the longest laterals, but foot for foot, their wells are expected to recover the most gas, which points straight to rock quality and perhaps completion designs in the area. And it's worth saying where these EUR numbers come from because people always ask. So they're not simple decline curve fits. Novi generates them on an auto-regressive machine learning forecast. So the model learns from the full producing history of every well in this basin, projects each well forward, and we aggregate those well level forecasts at the operator level right now. So this is a data-driven forecast across the entire well population, not a hand-picked type curve. So let's switch back to total gas because I'm going to start to look at trends over time. And we're also going to turn off our first production year filter. I want the full history in view for the next thing we'll look at. And I'm going to switch over to the line chart and change the grouping to formation. So now instead of looking at a leaderboard, we're going to be looking at how each formation's production has grown over time. So the Haynesville Shale dominates completely, and that's that orange line, which is expected. But look at the Bossier in blue starting to creep up, both the Bossier Shale, which is what they call the portion of the shale above the middle Bossier, but below the upper Bossier, as well as this middle Bossier is also creeping up. Bossier contribution has been growing, especially in recent years, as you can see. Bossier sits directly above the Haynesville, as we discussed before, and as the core of the Haynesville acreage has tightened and operators have gained experience, co-developing the Bossier from the same pad has become more attractive. Adds inventory depth without having to add more acreage. The chart also tells the price story, and there are 2 dips worth pointing out. So you can see this first major one in 2016. That was when the gas price crashed. So Henry Hub went to $1.50. The gas directed operators slammed the brakes. Rigs left the Haynesville. Completions paused, and you can see production begin to creep right back up. And what pulled it back out was the modern restart. So longer laterals, bigger completions, more efficient drilling and completions programs that made wells economic again. And there, the production climbs all the way up to this tip top peak in 2023. So that's when production hit nearly 17 BCF per day. Operators were ramping really hard while prices supported it. Then 2024, you can see that dip right here. Why don't we change the scale? We can drill in. So you can see that dip in 2024 when prices fell below break even. And in most recent months, you can start to see, instead of yearly, because we don't have all of 2026 reported, I can go to monthly. You can see the start of a new ramp as LNG demand pulls volume forward. So I'm going to scale it up. Notice these recent months aren't completed yet. We're still waiting on state data to populate our most recent months, but you can see the dip in 2024 and then production start to ramp back up. So we'll see what happens as we get more data from the state of Louisiana. Okay, and the state of Texas as well. Don't want to leave them out. So let me switch to the pie chart view now. And I'm going to group by county and parish. And we're going to start to look at market share by geography. And we're also going to look at some of the geology and how that geography, that market share by geography is shaped by the geology. So I'm going to switch to county. And you can see that the production market share is dominated by DeSoto Parish in Louisiana, followed by Red River, and then closely behind by Caddo, and then Panola, to a smaller degree Harrison, and then we have this long trail of smaller producing counties. So there's around 25 counties and parishes in this play, which tells you how wide this basin is. But the production is clearly anchored in the Northwest Louisiana core. And the natural question is why those few counties own so much of the pie, and the answer is geology. So to show that, let me filter just to the Haynesville formation in my filter tray. Hit apply. It's a dominant contributor, which is why we're going to look at it. And I can color my map. I have it on true vertical depth, and those core counties sit in this geologic sweet spot of around 11 to 13,000 feet. I can click on a county to kind of highlight its individual depth. So here's DeSoto right here. So it's deep enough to put the rock in the dry gas window with full thermal maturity. It's hot, 300 to 350 degrees, and overpressured. But it's not so deep that it stops being economic and that all the hydrocarbons are cooked out of it. And the high pressures here are what drives high initial rates and the big URs we just saw BP posting. I can switch to depth to see how, I can switch to thickness to see how thickness changes by county with geographically. And I can see it gets real thick as you move over to the east in Red River. And again, DeSoto is kind of in this sweet spot. The formation seems to be better in thicker areas. So in DeSoto, Red River, to a lesser degree in Caddo. So all of these different counties have good rock for different reasons. So it has to be in a sweet spot between TOC, brittleness, thermal maturity, pressure gradient that make this core good rock, which is why the production share, the activity, and the best URs are all concentrating here. So now let me clear the Haynesville formation filter, and we'll get back to the full picture. and switch the grouping from county to current operator. This is that consolidation story in one image. So expand synergy slice is enormous. Atomos is second, and Comstock is close behind and third. After those, the pie starts fragmenting into a long tail of smaller operators, royalty-backed positions, and private equity names. The top operators here are all the product of major deals. So expand from the Chesapeake Southwestern merger, Atomos from Mitsubishi's Aethon acquisition, and Comstock has been reshaping its own position. Recently sold off its East Texas Shelby Trough assets to focus on its Louisiana core. You can click on that to see where that's at now. So nearly $15 billion in M&A in the last 2 years is visible right here. And the fragmentation below the top tiers tells us that the consolidation is probably not finished. So what I hope you take away is the rankings tab doesn't have to be just a leaderboard. It's a fast way to answer competitive questions. Who's growing? Who's pulling back? Which formations carry the most most production weight, and how operators stack up on a normalized efficiency basis, and what the geographic concentration of a play looks like. And everything updates dynamically with your map filter. So if you want to scope this to a specific county, draw a polygon, the charts will update instantly. I'm happy to take any questions and show you other parts of the platform or talk through how this applies to your work. So feel free to ask questions.